Confused by new tax system? Don't worry. In this video, we will break down the goods and service tax, India's major tax reform into easy to understand segments. No more juggling VAT, excise duty and other taxes. GST simplifies everything by bringing it under one system, making compliance easier for business of all sizes. We will explain who needs to register for GST and how to navigate the filing process to avoid penalties and keep your operations running smoothly. But GST is not just about filing, it's also about savings. We will reveal the benefits of input tax credit, which allows you to claim credit for taxes already paid. Reduce your overall tax burden. Say goodbye to confusion and join the GST revolution. Hello learners, welcome to the course on GST, that is goods and service tax. Nowadays we are hearing this word GST or goods and service tax if you go for any retail mall, shoppings, for any other things, okay. So we are going to continuously or recurringly we are going to hear this word called GST. So today we will learn what is GST, how they are going to charge, or what is the interest rate, what is the tax structure, everything we are going to discuss in this. Okay. So first we are going to discuss about the tax structure in India. So usually the government is following these two categories of taxes. First is direct tax and another one is indirect tax. So the direct tax, if a word comes direct tax, first thing will comes to our mind is income tax. That is the whatever the tax burden an individual is going to bear, that whatever the amount you need to pay for the government as a income tax, that is direct tax. That is the person is going to directly pay tax to the government. That is the best example is income tax. If it is comes to indirect tax, so we have heard this word GST, correct? So if you go for any shopping, so usually we will go for we are going to go for shopping of clothes. So if you are going to purchase the clothes or if you are going to purchase the food grains, then in the bill they are going to mention CGST and SGST. Some percentages they are going to mention, correct? So what do you mean by that CGST, SGST? So that is central goods and service tax, state goods and service tax that they are going to charge. And we are going to pay to the shopping or whatever we are going to purchase in that shop, right? For that shopkeeper, we are going to pay that tax percentage amount. We are not going to pay directly to the government, correct? So just we are going to pay for the whoever the shopkeeper is there, for them we are going to pay and he is going to give the bill or a voucher he is going to give, correct? So that is called indirect tax. So the major difference in this indirect and direct tax, in the direct taxation, the person as an individual or the taxpayer directly they are going to pay amount to the government. But in case of indirect tax, the taxpayer is going to pay but not directly to the government, with the other parties like shopkeeper or the who is the vendor is there. For that vendor they are going to pay, that vendor will remit that money to the government. So that is the indirect taxation. So these are the two major categories are there in India. Next, the features of indirect tax. What are the characteristics or the nature of these indirect taxes are? The first one, the important source of revenue. For a government, it may be any government. It may be Karnataka state or any other states, or it may be central also. So these are the main revenues they are going to collect from the individuals or from the taxpayers. Nowadays, we are going to do so much of shopping, whether it may be a food grains or we are going to go for any outside, that is hotel or food grains or shopping of clothes, shoes, any other material. So usually we are going to purchase and we are going to spend so much money in the shops, correct? So that whatever the GST we are going to pay, okay, that is the major revenue for the all the government, whether it may be a central or the state government. So that is the first feature of indirect tax. Next, tax on commodities and services. So just now I have given the example of shopping. So if you go for food industries, that is your hotel, correct? That is a service, that is not comes under the commodity, correct? So if you go for hotel also, service sector, they are going to charge. Or if you go for any other services, okay, it may be hospital, educational, all those things, okay, they are going to charge this GST. So for our services also we are going to pay, and it comes to commodities for food grains or cloths or our shoes or any other automobiles. For purchasing all these things, we are going to pay GST, correct? So that will pay for our commodities, that is goods as well as services. We are going to pay tax for all these things. Next, shifting of burden. Shifting of burden is nothing but, so in the direct taxation, what we are going to do? We are going to directly pay to the government. But in the indirect tax or in the GST, what we are going to do? We are not going to pay directly to the government. We are going to shift whatever the tax amount or whatever the burden that we are going to transfer to the shopkeeper or to the vendor. Okay, that vendor is going to remit that money to the government on behalf of us. So that is called shift of burden. That is tax burden we are going to shift from one person to other person. And the next one, inflationary. So how this GST will work in inflation time? So inflation is nothing but the prices of the goods or the commodity is very high, correct? So on that time, how the price is going to change as per the indirect tax. For example, in the earlier days, the MRP is 10 rupees, for example. For that 10 rupees, we are going to pay tax as a sales tax or the VAT, correct? Before that, for producing that product also, they are going to purchase the raw material. For that raw material, they need to pay sales tax or the VAT they need to pay. After that, if they want to purchase any ancillary service products for producing that product, for that also they need to pay. So all these tax they are going to keep on the product MRP price. If for example, the cost of production for that particular product is 5 rupees, but they are going to sell it for 12 rupees. Why? Because the sales tax or the VAT that they are going to add, and that burden will be shifted to the customer. But nowadays what happened? That will be the cascading effect is there for all these indirect tax. So after production of that particular goods, okay, whoever is going to purchase that product or services, for them they are going to charge this GST. So the price value MRP, earlier it is 12 rupees, now they are going to sell it for 8 or 9 rupees. Why? Because they are cascading the sales tax and value added tax or the central tax. All those things will be redeemed, correct? So that is the reason the inflationary will work in this indirect tax. Next, wider tax base in all the globe. So uniformly they are going to maintain this GST rate of interest for all these goods and services, or whatever the commodities or whatever the services we are going to take. So we have the global scope of this indirect taxes. Next, we are going to discuss about the introduction to GST or the overview of GST. Okay, GST stands for goods and service tax. So whatever the goods or the products you are going to purchase, or whatever the services you are going to take from the service sector companies or from the industries, for that we need to pay tax, that is the goods and service tax. So GST is a comprehensive indirect tax levied on the supply of goods and services in many countries. If for example, from India to other country, we are going to export some goods, then we are going to charge this GST, and we are the receiver of the GST amount, because other person who is going to export that product and services for their country, they are going to pay tax. So that is the main revenue for our India or for our government, correct? So like that, whatever for intrastate or the interstate, for example, we are going to send goods to Tamil Nadu, or we are going to send goods to Andhra Pradesh, for all those things, we are going to take the GST from that particular state. Why? Because we are the exporter, or we are going to send the goods to the particular other place or other country or the other states, correct? So on that time, our government or our state government and the central government, they are going to collect the GST from that particular state. So GST is the consumption tax that is imposed on the supply of goods and services. It is a destination based tax, which means it is collected at the point of consumption. So I have already given the example, right? If for example, we are exporting goods or we are sending goods to the Andhra Pradesh. So Andhra Pradesh is the consumption point because they are using that product. That is the reason they are exporting, correct? So when they are using that product or they are going to consume that product, then they are going to pay tax because they are going to purchase from one party or from one shop, correct? On that time, they are going to pay tax on that particular shop. That shopkeeper is going to redeem that money, or he is going to payment of that money to the our state government, because we are the exporter of that product and services. So at the point of consumption only, we are going to collect this GST. That is the main feature or the main characteristics of this GST. It is the consumption based tax. Okay. So next, after implementing this GST, what are the many taxes are we are going to replace or we are going to eradicate it from our tax system? Okay. Before that, I will tell you cascading effects in GST. What do you mean by cascading effects? If, for example, in the earlier example I have taken, the central government is going to levy some tax, correct? Sales tax, value added tax, all those things will be there in the earlier case before implementing of this GST. So before that, we have so many other taxes are there. But after implementing the GST in India, so all this, whatever the taxes are there, all these were replaced with the GST. So many taxes are replaced and called as a GST. So that cascading, tax on tax, tax on tax. For example, for producing 1 unit of X product, okay. So for that product, we are going to purchase 10 rupees of raw material. So for that 10 rupees, we are going to pay sales tax of 10%, for example. So 10 rupees of that raw material price plus 1 rupees of VAT or the sales tax, 1 rupees. So total 11 rupees is the raw material price, correct? So for that 11 rupees, again we need to purchase some ancillary service products. So for that, we are going to pay tax, including tax, that price is 22 rupees, for example. So for producing that particular product, that is X product, we are going to spend 30 rupees. That labor cost, machine hour, everything, including 30 rupees is the cost of production for that particular one product. But we are going to sell it for 40 rupees. So 10 rupees profit with the tax we are going to sell. We already paid tax for raw material. We already paid tax for the ancillary service products. And after that also for finished goods, we are going to pay tax. So this is called cascading effect. Tax on tax, we are going to pay. Okay. So the main benefit of implementing GST in India, we have to reduce this tax on tax, that is cascading effects is reduced. So what are the multiple taxes we have eradicated with this implement of GST? So first one, excise duty. So whatever the like liquor or any other nicotine items, okay, if we are going to export, for that we have to pay excise duties. Okay. So and then service tax, or we also call it as sales tax. Whatever the goods and services we are going to purchase and we are going to taken from other states or from the other country and we are going to take to our home country or home state, then we need to pay this sales tax or the service taxes. Then value added tax were there, central sales tax were there, that is directly we are going to pay this tax to the central government. All these 4 taxes were eradicated. Not only these 4, we have many other sub taxes were there. All these were replaced and eradicated after implementing this GST. So these are the few main taxes. I think so if before 2017, if you remember, okay, if you go and shop for any other like jewelry, or if you go and shop for automobiles or any other spare parts of the auto, okay, then you are going to heard this word sales tax, central sales tax, value added tax, all these words you have heard before 2017. Now you are not going to hear these words frequently. Why? Because all these taxes or all these 4 taxes were replaced and now we call it as GST. So these are the few taxes were eradicated from our tax system and then they have implemented GST. Okay. So this is the cascading effect implemented after these effects in the GST system in India. Next, needs of GST in India. So what are the needs? Is it required to India implement this GST system? Yes. Why? Because the first one, the simplification of taxation. So earlier it is the tax on tax, sales tax, value added tax, excise tax, central sales tax, all those things we are going to pay. That is huge burden for a person or the consumer to purchase that particular product. And the price is also very high because we are going to pay tax on tax, correct? So that is the reason, and we need to easily simplifies, or we can easily the simplifying of all these tax rates. So on that time, the sales tax, whatever the goods and services are there, or depending on the products, okay, they are going to change this each and every product, that service tax or whatever the percentage they are going to charge, that is changing. But now the GST, whatever the 1% is there. For example, we are charging 5% for one product, means all over globe we are going to charge, or in our India we are going to charge only 5% of tax to that particular product, not more than that. Okay, that is the first need of GST in India. And the second one, removal of tax cascading. I have already discussed about this, right? Cascading effect. So tax on tax we are paying. That we need to remove, or we need to eradicate from our Indian taxation system. So that is also the main need of GST in India. And the third one, creation of common market. So if it is GST percentage is same for all the globe. In the global market also India can participate, correct? Not only with the whatever the goods and services we have, and we have very specialized in producing that particular products or services, whatever we can export to other country, or we can sell it to other country, that we can go and sell in our global market. India can also contribute in the global market with the whatever the goods and services available with us. Okay, so that is a one more need of GST. And the next, reduction in tax evasion. So in the cascading effect, we already discussed the tax on tax. Raw material also we are going to pay tax. For the whatever the ancillary services we are going to pay tax, and whatever the machines required for producing that product, for that also we need to pay tax. And after that, so the cost of production, on that we need to pay tax, and then they are going to add the MRP price, correct? So all these taxes they can evasion from the taxation system or for that particular product. That is also one more need of an GST. Next, boost to GDP growth. The GDP stand for gross domestic product. So whatever our domestic products are in the locally we are going to produce, or we can manufacture, that GDP is going to increase. Why? Because we can whatever easily we can produce or we can manufacture, that goods and services easily we can market for other state or for the other countries also. So that will increase our GDP percentage in the economy. Okay, and it will give more profit to our state also, correct? So that is the reason we need to implement this GST in India. And the next one, SME empowerment, that is small and medium entrepreneurs. Okay, so this GST is going to encourage these SMEs. Why? Because the small medium entrepreneurs, they are going to run small of factories. Okay, whatever they produce, that will be used for the big manufacturing company as a ancillary service products or the supporting products for the main product. If for example, the production of automobile or a car, okay, they are not going to manufacture all the spare parts whatever required for that particular car, that they are not going to produce or manufacture in their unit. Okay, so they are going to export that car body from one person, engine from one, and whatever the seats are required, correct? That seat or the floor mats, all those things they are going to export from one person, and glasses, whatever the mirrors, so many glasses are there, right? That they are going to import from one company or one factory. Okay, like this, all these products they are going to collect from each and everyone, or whoever is going to produce that products and services. They are going to collect, and they are used as a ancillary service products to produce that car. So on that time, this whatever seat covers or leathers, all those things, these small and medium entrepreneurs, they are going to produce. From there, they are going to purchase, and they can give whatever the reasonable price is there in the market, they are going to give it to that small and medium entrepreneurs. That is also encouraging our SMEs in our economy. Okay, so that is also one more need of GST in India. And the last one, increase tax revenues. How the government is going to increase our returns? That is the rates of interest they are going to charge on our goods and services, whatever we are going to consume or we are going to purchase. Okay, so that government is going to collect from the shopkeeper, and the revenue is going to increase to the government. And one more case is, for example, we are going to export the goods and services to the other countries or other state. Then also we are going to collect the revenues from that particular country or from that particular state. So it will increase our state's revenue also. Next, we are going to discuss about the key terminologies in GST. So what are the key terms we are going to use in the GST? Okay. So first one, the input tax credit, or we call it as ITC. So ITC is nothing but, like in general, as an income tax, we are going to pay tax, correct? And in our salaried company, they are going to cut the TDS, correct? after paying the tax, whatever the extra money we have paid to the government, we are going to take a refund, correct? That is in the income tax. So here in the GST, we are going to use the term called input tax credit for refund from the government. So if you pay any extra, or for example, I'm going to purchase that goods and services and I'm going to using for the manufacturing purpose and I'm going to make the final product and I'm going to sell. On that time, I can claim the input tax credit. That is the whatever the refund amount we can get from the government. That we call it as input tax credit. In a simple term, the refund from the government. Next, the threshold limits. The threshold limits is nothing but the barrier or the limitation we call it as, correct? So if for example, in the tax slab rate, 0 to 2,50,000 nil or 2,50,000 to 5 lakh 10%. So 5 lakh to 7,50,000 10%. Like that the tax slab rate we are going to divide, correct? So that 0 to 2,50,000 or 2,50,000 to 5 lakhs, that we call it as threshold limit. In the GST also, so we have the threshold limit. So if it is a small or medium entrepreneurs or businesses, okay, this is the turnover limit. So within that, if the turnover is, for example, less than 2 crore, there are no need to pay any GST. If their turnover is 3 lakhs rupees, they are not going to pay. If the turnover is more than 2 crores, then they need to pay GST. Like that is the threshold limits they are going to set in the GST. And you have one more question. Who is going to set this threshold limit? Correct? Usually we have questions. Who is going to fix that this is 2 crore rupees is the threshold limit. After 2 crores, we need to pay tax. Who is going to set? So in this GST, the GST council members, okay, they are going to do the meetings and then they are going to set these threshold limits. So this GST council member or GST council headed by the central finance minister. So they are the main person or the chairperson for the GST council. They are going to head this GST council and they are going to fix the threshold limits with the state government, whoever the bodies are required to take the decision. Okay. So next, reverse charge mechanism. So reverse charge mechanism is nothing but, so in the GST system, the consumer or the whoever the end consumer user is there, he is going to pay tax to the shop, correct, or the shopkeeper. So in the reverse charge mechanism, the shopkeeper is going to give the tax or is not going to collect the tax from. The shopkeeper is not going to take any GST from that particular consumer, and the consumer only is going to pay to the government. Why? Because he is going to use it for that business purpose. He is going to purchase that goods or products from that particular shopkeeper and he is going to use it for his manufacturing or for the production activity. So he is going to claim input tax credit. That is the reason he is going to pay tax to the government. This is called reverse mechanism in the GST. Next, the GST. I think so if you go for any shops nowadays, that is especially if you go for jewelry shop or if you go for hotel or if you go for any hospitals, okay, so where you are going to pay money, right, on that particular whatever the cash counter or with that office, okay, they are going to keep this number GST and it is a combination of 15 digits alphanumerics. That is the alphabets also there and numericals also there. That 15 numbers of GST number they are going to mention, correct? So what is the GST number? Goods and Service Tax Identification Number. It is mean if the whatever the shop or the gold shop or the hospital or the hotel, they are going to register under the GST and then they are going to get this unique number that is called GST number for their particular shop. So they are going to pay tax on that GST number only. So that is the reason usually in the shops they are going to mention the GST number. Okay. So if any other business person comes, he is going to claim that ITC. So if you want to purchase anything for his own manufacturing unit or for his business, then he can claim the ITC quoting that GST number of that particular shop. So that is the GST, Goods and Service Taxes Identification Number. Next, supply. Supply is nothing but the person or the shop who is going to supply goods to the other person or for the other business. So for the supply, they are going to charge the GST, correct? So the supplier is going to supply the goods for the X person, and from that X person he is going to get the GST amount. Next, the taxable person. Who is the taxable person in this GST? So as a consumer, we are all the taxable person, or the shops. If for example, the supplier is going to supply goods to that shop. So on that time, the shopkeeper is also a taxable person for the GST. So who is going to receive the goods? They are the taxable person in the GST. Next, the GST returns. We have different GSTR returns are there. Okay. So each we have explanation, that is GSTR 1, 2, 3 subcategories also there, that I am going to explain in the coming slides. Next, the GST Council. I have already discussed in the threshold limits. The GST Council, they are the panel members or the body, they are going to take the decision on the threshold limit or whatever the goods percentage or the GST percentage for that particular goods, or for which goods we need to give the exemption, for which goods we need to charge high tax. All those things will be discussed and decision taken by this GST Council. And this GST Council team headed by the Finance Minister of Central Government. Next, the place of supply. So if for example, I will take the last example only. So Bangalore or from Karnataka, we are going to supply goods to the Andhra Pradesh. So which is the place of supply? So place of supply is the Karnataka, because we are supplying goods from the Karnataka to Andhra Pradesh. So he is the receiver. Andhra Pradesh is the receiver, Karnataka is the supplier on that time. So this is very, very important in the GST. And the last one, time of supply. So in which time or the dates he is going to supply goods from which place to which place. So depending on the time also, the GST rates will be changing, right? So they are going to check this time of supply also. So these are the key terminologies we are going to use in this GST course. Next, benefits of GST in India, or the whatever the advantages. Okay. So first one, reduction in cascading of taxes. So many taxes we are going to eradicate, and we are implemented this GST. That is the first one. Second one, overall reduction in prices. So because of this cascading effect, the product price or the price of the product, that is the MRP value, is going to decrease, and we are going to get at the reasonable price. Next, common national market, that is the global market. All whatever the manufacturer are there, or the suppliers or the exporter, they can easily participate in the global market. Next, the benefits of small taxpayers. So I've already discussed, they are encouraging this small and medium entrepreneurs as well as the taxpayers also. They are going to give the so much of tax reduction or tax rebates, and then they are going to encourage all these people. Next, self-regulating tax system. So this would be all these. If you go for any other states also, the tax percentage or the GST rate of interest is same. So there is no need to explain by any other person. If you purchase in the Karnataka also same, if you purchase in the Andhra Pradesh also, same GST rate will be implicated on the particular goods and services. So next, non-intrusive electronic tax system. So in the income tax, for example, we are going to go for the ITR and the income tax, whatever the website are there we are going to apply, correct, as an individual. But here we are not going to do anything, just we need to pay GST to the shopkeeper, and the shopkeeper will take further head, correct. Next, simplified tax regime. So we have only few interest rates in the GST. So easily we can recognize for this whatever the 0%, 5%, 8% or 28% for which we are going to charge. That is the simplified tax regime. And next, reduction in multiplicity of taxes. So many other taxes we need to pay, that they have eradicated, correct. That is the multiplicity of taxes. Next, consumption based tax. This is earlier also I have told. So whenever we are going to use or the consumer that particular goods or services, then only we need to pay GST. That is called consumption based tax. Next, the types of GST. So we have three types of GST. First one is central GST, that is CGST. Second one is state GST, that we call it as SGST. And the next one, union territory GST, that is UTGST. So these are the three categories or three types of GST we have. Usually, if you go for any shopping or if you go for any hotel also, after purchasing or after having all this food, they will give the bill. But in that bill, they are going to mention only these two things, CGST, SGST. If for example, CGST they are going to charge 5% means SGST also 9%. If they are charging 8% of CGST, then SGST also 8%. The equal amount of percentage they are going to distribute for state and central. Correct? So central GST is nothing but whatever the amount we are going to pay as a CGST, that will directly remitted to the central government of that particular country. If SGST, if you are going to pay, that whatever the tax you are going to pay, that will be remitted to the particular state governments only. And UTGST, for example, I am going to send goods from Karnataka to Andhra Pradesh via Tamil Nadu. So on that time, the goods is going to start, that is supply from the Karnataka, it will go to Tamil Nadu and then it will reach the Andhra Pradesh. So on that time, the three states are coming to the picture, correct? So on that time, they are going to check which is for which state we need to pay tax and how much we need to pay and how much we need to pay it for the central. That is the combination of two or more state and one central. Okay, that we call it as UTGST in a simple meaning. Next, the GST interest rates. So I have already explained you the threshold limits. If it is 2 crore or for CGST 9% or CGST 10% or 18%, how they are going to decide? So here we have, these are the few interest rates were there. So based on this, they are going to charge for that particular goods and services. Okay. So first one, GST rates are usually categorized into different tax slabs. The specific rates and the items that fall into each slab can vary by country to country. From one country to other country, the tax slab rate, they are going to change. Why? Because if for example, if the purchase of any auto vehicles, okay, in Karnataka, they are going to charge more GST. The same goods or the same vehicle, if you purchase in the Pondicherry, they are going to charge very less GST because they have very good number of difference of vehicles are available with the minimum price or the reasonable price, because they have very near to the manufacturing units, or they are going to produce the goods and services or the automobiles for a lesser price. So that is the reason they are going to charge very less price or less GST rates for that particular product. Like that in Karnataka also, the spice items, okay, we are going to charge very less. Why? Because we are huge manufacturing of, or we are going to produce a number of that spices. Okay, like that, the each country to country or state to state, they are going to vary this tax slab rates. The common tax slab might include 0%, 5%, 12%, 18% and 28%. So these are the 5 categories of interest rate were there, and with some goods and services being exempt from the GST also. For few goods and services, they are going to give the completely exemption. So if for example, they are going to charge 5%. So in that CGST 2.5, SGST 2.5. If they charge 12%, 6%, 6% each, 18%, 9% each. Like that, the whatever the interest rate they are going to charge, they are going to equally distribute for the CGST with the SGST. Next, exemption and special rates. So certain items and services may be exempt from GST or subject to the special rates. So for example, basic necessities like food items, healthcare items, that is your medical, educational services might be exempt or taxed at a lower rate. So compared to other countries or other states, okay, they are going to charge very less, or in some time they are not going to charge also. Next, composition scheme. Many countries offer a composition scheme for small business. So GST's main need is, or the importance is, they need to encourage this SMEs, correct? So under this scheme, the business with turnover below a certain threshold can opt for a simplified GST process, paying tax at a fixed percentage of their turnover. So if it is 2 crore and less, then they will count under this composition scheme of GST, and they are going to pay only the percentage, whatever fixed percentage is there, just they are going to pay that percentage on the whatever the turnover they have made for that particular, whatever the goods and services they have produced or manufactured. So that is called composition scheme. Next, we are going to discuss about the GST registration. So how we need to log in to that web page, and what are the process or what are the documents is necessary, and how to go with the standard procedure of GST registration, that we are going to discuss. First, the introduction to GST registration. So why we need to register under the GST, or why we need to take the GST number, what is the importance of GST registration, or what is the need of GST registration, that we are going to discuss. So GST, that is goods and service tax, registration is a fundamental legal requirement for business and individuals engaged in supply of goods and services in many countries that have adopted the GST system. So why we go for this, or why we need this GST registration? Because if, for example, if you are a person not register your company under this GST, and you are going to supply the goods and services for the other shops or for the other state or other country, then that person who is going to receive your goods and services, if he is registered under the GST, then he is not going to accept your whatever the goods and services you are going to send. Why? Because you are not registered under the GST. If you are registered under the GST, you have a GST number. If you have that GST number, then only they are going to accept your goods and service tax. Why? Because they can claim the input tax credit. And this is the legal mandatory nowadays for doing all these businesses. Not only for supply, if it is small shops also, if it is a clinic, or if it is a small jewelry shop, they also need to take this GST registration, and they need to take that GST number. Because if they want to do shops, or if they want to run a business, this GST registration is mandatory as per the legal requirement. Next, the GST registration process through which a business or an individual register with the tax authorities to become a registered taxable person. GST registration process through which a business or individual registered with the tax authorities to become a registered taxable person for the purpose of collecting and remitting GST on their taxable supply. If, for example, I am also be a taxable person. Why? Because I am directly not paying GST to the government, but I am paying for the shopkeeper. If the shopkeeper is the registered taxable person, then only he is eligible to collect the GST from our customers, and then he can remit that money to the government. If he is not registered under the GST, or if he is not a registered taxable person, then if you pay tax also, he is not going to pay to the government. Why? Because he is not a registered taxable person. Correct? So, if you want to collect the GST from the customer, and if you are going to claim the whatever the input tax credit or whatever the benefits you are going to get from the GST, then if you have become a registered taxable person, then only you are eligible to take all these rights or the features from the GST or the benefits from the GST. Once registered, the entity is legally recognized as a GST taxpayer and is required to follow the rules and regulation set out by the GST authorities. Okay. So, if you are a registered taxable person, then whatever the GST authorities or the council member, they are going to give some advantages or whatever the tax benefits, whatever it may be. Okay. Then you can enjoy all these services or whatever the benefits they are going to offer. If you are not a registered one, then you cannot offer or you cannot get any offers or claims from the GST website. The benefits of GST registration. What is the advantages or what are the benefits we are going to get if you are registered under the GST? So, first one, the legal recognition. If you have the GST number or if you are registered under the GST, then you are a legal business authority or a legal business entity to run in the market. If you are not registered, then you are not a legal recognized or legal registered company or a business, correct? So you are going to run a business, that's all, but it is not a legal one. If it has to be legally recognized, then you need to take the registration under the GST. Second point, the input tax credit. I have already told you the input tax credit is nothing but the refund. Whatever the amount you are going to refund it from the government. If you are registered under this GST registration process, then only you are going to get this input tax credit for your business. Otherwise, you are not going to get this input tax credit, or you are not eligible to get this ITC from the government. So next, complaints. Complaints is nothing but if, for example, any person or any other business, if they are going to misleading whatever the amount they have taken from the customer, or if you have any issues in the GST, or if you are not getting the refund, on that time you can easily claim and you can raise the tickets or the issues as a complaints in the GST website, and then you can resolve or you can get the whatever the suggestion or solution for that particular problem. Next, access to larger market. So if you are registered under GST, you can supply or you can export to the any of the states or any of the countries and any of the business also, because you are also registered under the GST and you have a GST number. So you can do the business legally with the any other persons or any other shops also. Next, the transparency. So if you registered and if you are going to legally recognized business, then the transparency will be there. If you any other person or any other shop, if it is required, they can easily click or they can enter your GST number and they can see whatever the turnovers or how you are going to file the GSTs and you are going to regularly paying the GST or not, all those things they can check. That transparency will be there. Next, competitive advantage. If, for example, if you are not a registered taxable person, okay, then other business or your competitors are registered under the GST. So other persons or whoever is going to purchase the goods and services, they are going to prefer that GST number. Whoever is going to register under the GST, they are going to prefer them and they are going to purchase from their shop, not from your business. And the last one, eligibility for e-commerce platform. So if you are purchasing from any e-commerce platform, whether it may be a Flipkart, Amazon or any other, okay, so for that also they are not going to get the eligibility. If it is Amazon, Flipkart, they are already registered under the GST and they are going to pay tax to the government. If they are not registered, then they are not going to get the eligibility to do the online business or online goods sale and buying in the online sites. That is your e-commerce platforms. So next, the GST registration process. So this is the 4 standard process or standard steps are there in the GST registration. Okay. So first one, application. So first you need to submit the application. So in that application, whoever the proprietor, their photo and their PAN card and whatever the taken permission from the whoever the body is authorized for the business, okay, and other few details of that particular business and the proprietor, they are going to ask in this application. They have to submit all those documents along with the application to the GST portal. That is the first step. Second step will be whatever the supporting documents they are going to submit, whether it may be a permission letter or the whatever the turnover, capital, capacity or the plant and machinery they have purchased or the bank loan, whatever the details they are going to produce, correct? So that they are going to verify in the second step. So if, for example, all these documents whatever they have sent, if it is proper, then they are going for a next step. Otherwise, if it is any legal issues are there or any litigations were there or if we require other documents, then what they are going to do, they are going to resend that particular application to that person and tell them to, or they are going to inform them to submit whatever the required documents are there. That is the second step. Third step will be issuance of GST. So after verification, everything is good or everything is verified, then they are going to give this GST number. So in this GST number, it's going to contain of 15 alphanumerics. Okay, alphanumeric is nothing but the alphabets will be there and the numerical numbers also there. The combination of alphabets and the numericals, 15 digits of alphanumeric they are going to give as a GST number, and that is unique number. Whatever they are going to give it for the earlier person. So it is different from others. Okay, unique number they are going to give as a GST number. Next, so if it is any complaints are there or any litigations were there, then they are going to reject or they are going to ask for the clarity in the final step. So these are the 4 steps they are going to follow for the GST registration process. This is the standard one. Next, the mandatory registration. So for whom and all it is mandatory. Okay. So first one, persons making interstate taxable supply. So if it is a person or a business, they are going to supply the goods for the interstate. So I have given an example, right? So from Bangalore or to the Karnataka, they are going to supply to the Andhra Pradesh or to the Kerala or to the Tamil Nadu or to the Telangana. Okay, like this interstate they are going to supply of goods and services. Then that person should have to register under the GST. So second point, the person required to pay tax under reverse charge. That is, we have discussed, right? Reverse mechanism. So the person is not going to pay tax to the shopkeeper. Indirectly is going to pay to the government. Okay. For that case also they need to register. And the third case, casual and non-resident taxable person. So if he is a non-resident, then he need to register. Mandatorily he need to register under the GST. Next, e-commerce operator or those required to collect TDS. So the online sites, that is your Meesho, Flipkart, Amazon, all these things. Okay, so they need to register under the GST. Why? Because they are collecting TDS or they are collecting GST from the customers, correct? So they have to register under the GST. Next, the person supplying goods through e-commerce operators. So if for example Meesho, the Meesho is not going to supply the goods and services. The manufacturer, okay, through the Meesho they are going to supply the goods and services. On that time, whoever the manufacturer or whoever the suppliers, okay, they need to register mandatorily. Next, persons making supplies on behalf of a registered taxable person. Okay, if for example Amazon is the registered taxable person. Under that, for example, e-cart, okay, or e-com, okay, they are going to supply the goods and services, correct? So on that time, that e-com express or the e-cart, all those things, they have to register under the GST. That is also mandatory. Next, input service distributor. So whoever the distributor main work is to, or main business is to, they need to distribute the whatever the goods and services are there or the products are there, they need to distribute, correct? So on that time they have to mandatorily they need to register. Next, every person supplying online information and database access or retrieval services from a place outside India to a person in India other than a registered person. Okay, so if you are supplying of data, okay, or you are going to do the retrieval services, whatever the data backup you are going to take for all these companies or all these services agencies, okay, they need to register under the GST. Next, the registration GST to be granted state-wise. So this GST will be given or they are going to provide it the state-wise. That is mandatory, and PAN mandatory for GST. In the process, I have already told you, right? So in the application, the proprietor has to submit the PAN card or PAN number, because on that basis, they are going to take this GST number. And the last one, the separate registration permitted for multiple business vertical in a state. So if for example, I have 3 different kinds of products and services companies. One is, I am there in the food industry, I am there in the automobiles, and I am there in the stock market business. And one more is iron business, I am there. So if in the same name, I have 4 sub businesses, correct? So on that time, I need to take for individual business unit. For iron, I need to take separate. For food, I need to take separate, or for irons, or whatever the automobiles I have, for that individually I need to take the GST number. That is also mandatory for all the persons whoever running the subunits under the one name. That is also mandatory in the GST. Next, we are going to discuss about the input tax credit, that is your ITC. So already we have discussed, right? So it is nothing but as a refund, whatever the refund we are going to get from the government, okay, that is called input tax credit. We'll see in detail. So input tax credit is a fundamental concept of goods and service tax system that allows registered business to claim a credit for the GST they have paid on their purchase and expenses. So whatever they have made the purchases, for that they can get this input tax credit, and for their expenses, sometimes they are going to spend for that goods and services for their business also, correct? So that is a expenses. For that also they are going to pay GST. So that will be refunded from the government as a input tax credit, ITC. The ITC helps reduce the overall tax burden and prevents the double taxation. So whatever the purchases they have already made, and for the expenses they have paid for the GST, so that will be, again, there are no need to pay that GST for that particular goods and services, or for that particular purchase of that goods and services. So that is the input tax credit. Next, the eligibility criteria for ITC. The conditions and criteria that businesses must meet to be eligible for ITC. So we have some eligibility criteria. If they meet that, okay, then only they can get the ITC or the refund from the government. So these are the conditions, or typically include the first one, being a registered taxpayer under the GST. So we already seen the GST registration process, correct? So there is a need of GST registration. So if you are registered under the GST, then only you can claim the ITC. That is the first eligibility criteria. Second one, using the purchased goods or services for business purpose. So if you are going to purchase the goods and service and you are going to use that goods and service for the business purpose, then you can get the input tax credit or the refund from the GST or from the government. Next, the processing valid tax invoice and documents. So whatever the valid documents you are going to produce, or they are going to given for the GST portal, they are going to verify the documents and then only they are going to give the input tax credit. If it is valid, then only they are going to give. If it is not valid, they are not going to give any refund. And the last one, complying with GST laws and filing returns. So you need to obey for the whatever the GST rules and regulations are there, you need to obey for that, and then you are going to follow the whatever the rules and regulations for filling the returns in the GST portal. Then only you can claim the GST return, or you can get the input tax credit from the GST. So types of input tax credit. So what are the various types or varieties of input tax credits were there? So first one, input tax credit on inputs, that is the ICT one. Okay, so here they are going to give the whatever the inputs you are going to give. As per that, they are going to claim the ITC. Next, the input tax credit on capital goods. So as per the form of ITC2, you can claim the whatever the capital goods. Okay, on that you can get the refund or the input tax credit on the capital goods. Next, input tax credit on input services. So whatever the services you are consumed or you are taken for your business purpose, that is also you can get the ITC as per the ITC3. Next, blocked credit. So as per the ITC4, for few they are not going to give any refund. So it is blacked under the GST only. So that blocked for whatever you are going to do the transaction with them or with that GST number, that won't get the input tax credit as per the ITC4. And next, ITC in special circumstances, ITC5. For example, in the pandemic time, okay, they are going to give some free hand or exemption for the whatever the medical requirements are there. So or any emergencies are there. On that time, they are going to give some special circumstances. So on that time also you can get the ITC under this ITC 5. And the last one, the transactional ITC. So transactional input tax credit is nothing but whatever we are going to waive off. For example, we are going to blending with the old taxation system and the new taxation system. So we have paid tax in the old system as well as new system. So on that time, we are going to verify how much you have paid in the old system, that they are going to transit in this new system and they are going to give the returns in this ITC. Next, we are going to discuss about the returns process under the GST. So here we are going to discuss about what are the varieties of GSTR returns are there and what is going to indicate. For example, GSTR 1 or GSTR 2 till GSTR 11 are there, correct? So that we are going to discuss in this video. So in general, the returns is also known as compliance verification. So how we are going to, like for example, income tax, we need to e-file and then we are going to get the form 16, correct? So like that, here also we need to do the whatever the turnovers as per the transaction or as per the turnover, we need to file or we need to do the verification for all the whatever the submitting the vouchers or the supporting documents with the GST portal. The mode for transfer of information to tax administration. So this is the way or the path we are going to follow to give the supporting documents or our turnovers. So this we are using as a mode. So GSTR returns. Okay. So to declare tax liability for a given period. So usually we are going to do the tax calculation for the 1 year, that is 12 months of period. It's going to start from 1st April of that particular year to the 31st March of the next year. So within the 12 months of time, whatever the turnovers they have done or whatever the transaction they have done, that they are going to given in that particular GST rates or whatever the GST they have collected. As per that, they need to file and then they need to pay the tax. Providing necessary inputs for taking policy decision. So as per the GST, whatever the decisions are there or whatever the mandatory rules and regulations are there, so that they need to taken care in this GST returns. Next, the features of tax returns in GST. So what are the features or the characteristics in this GST tax returns? So first one is based on transaction, that is invoice based tax return. So whatever, for example, the goods and service tax. So we have 0%, 5%, 8%, 18% and 28%, correct? So based on that, they are going to invoice based, they are going to do the transactions. Next, designed for system based matching of input tax credit and other details. So this will be applied in the import and export. So whatever the matching the input tax credit, that is the refund. So if for example, I am also having the GST number, I am going to supply goods for the other GST or the taxable person. So whenever they are going to import and export, so on that case, so I am going to supply the goods for the taxable or registered taxable person. On that time, I can claim the input tax credit. So that is the reason we require this GST returns. Okay. So out of population from details of outward supply. So all the GST or whatever the transaction you are going to do with your GST number, that will be already recognized or registered under this GST portal. So auto reversal of ITC in case of mismatch. So the reversal process, that is reverse mechanism, that will be applicable here also. And the concepts of ledger, cash account or input tax credit and the liability. So all these concepts will be there in the GST portal also. So whatever the ledgers you are going to maintain for the particular account or for the particular business, that is there, or cash account you are going to maintain, or the ITCs, input tax credit you are going to get, all these things will be maintained. And the last point, no revised returns. So here once whatever the date on that particular time, what is the GST rates were implemented, okay, that will be charged. That not is going to revise or they are not going to do any changes in that GST rates. Here are the different types of forms are available for the GSTs or GST certificates. Okay, So standardized forms are from GSTR 1. So this is one form. So here detailed of outward supply of taxable goods or services affected. So from this GSTR 1 filing, we are going to get the outward supply of taxable goods and services. Next, we have GSTR 1A. So in this, details of outward supply as added, corrected or deleted by the recipient. So if there are any added or if they are corrected or whatever the addition they have done, or if it is deleted from that portal, okay, that they can claim in this GSTR 1A. So next, GSTR 2. So details of inward supply of taxable goods or services claiming input tax credit. So whatever the goods you have purchased for the purpose of manufacturing or for this purpose of supplying for the others, then for that whatever the input tax credit you are going to get, that will be there in the GSTR 2. Next, from GSTR 2A, that is details of inward supplies made available, know the recipient on the basis of form GSTR 1 furnished by the supplier. So through the GSTR 1, they are going to collect the information and they are going to create a report in the GSTR 2A. Next, GSTR 3. So monthly returns on the basis of finalization of the details of outward supplies and inward supply. So what is your final output supply you have made and input supply you have made? That will be taken in the monthly wise GSTR 3 form. Next, under the GSTR 3A, notice to a registered taxable person who fails to furnish the return. That will be given in the GSTR 3A. Next, the GSTR 4. So the quarterly return for compounding taxable returns. So in the GSTR 3A, we are going to get the monthly wise, correct? But in the GSTR return 4 or in the form of 4, we are going to get the quarterly wise. That is 3 months of report we are going to get. And the compounding taxable value is going to give. Next, from GSTR 4A. So details of inward supply made available to the recipient registered under the composition scheme on the basis of form GSTR 1 furnished by the supplier. So the supplier is going to give all the inputs, right, in the GSTR 1 form. That will be, we can take in the use of 4A also. Next, the form GSTR 5 written for non-resident foreign taxable person. Okay. So whatever the return the non-resident or the foreign person or foreign taxable person is going to claim or is going to make the entries, that will be taken care in the form GSTR 5. Next, form GSTR 6, it will be taken care by ISD returns. Next, form GST or 6A, the details of inward supplies made available to the ISD recipient on the basis of form GSTR 1 furnished by the supplier. So here GSTR 1 form is the mandatory, because from that only they can get to know the whatever the supplier or they are going to give the inputs in that GSTR 1. Next, the form GSTR 7 written for authorities deducting tax at source. So from which sources they are going to deduct the tax, that will be taken care in the GSTR 7. And next, form GSTR 7A TDS certificate, that is whatever the tax deducted at source, that certification they are going to made in this GSTR 7A. Next, the form GSTR 8, details of supply affected through e-commerce operators and the amount of tax collected. Your online sites, that is your Flipkart, Amazon or Meesho, all those commerce companies are there, correct? So they are going to take all this, whatever the supplies they have made, that they are going to tax collected, that they are going to take care in the GSTR 8. Next, the GSTR 9, that is the annual return. So combination of all this, like transactional wise, day wise, monthly wise, quarterly wise, off yearly or annually, all this information they are going to collect and they are going to generate this GSTR 9 form. Next, the GSTR 9A, simplified annual return by compounding taxable person registered under section 8, okay, So the compounding taxable registered person as per the section 8, okay, they are going to get the simplified annual reports for this GSTR 9A. And next form GSTR 9B. So reconciliation statement. So if any changes are required or whatever the entries you have made, okay, that is wrong, then what they are going to do, this 9B, as per the 9B, the reconciliation will be done and they are going to verify. And the next, the form GSTR 10, the final return, whatever you are going to submit for your company or for your business, that you are going to submit the final return as per the GSTR 10. And the last one, that is form GSTR 11, details of inward supplies to be furnished by a person having UIN, that is unique identification number. Okay, the detailed inward supplies they are going to given for in the GSTR 11. Next, the annual return. So the annual summary of all transaction, I have already told you, right? So in that annual transaction or annual return, so the each transaction wise, day wise or monthly wise, quarterly wise or half yearly, okay, all this information they are going to furnish and they are going to give the annual return. Next, accounts to be certified by the chartered accountant. So before you submit all these documents or all these transaction, that needs to be audited or the verified by the CA or etc. That is your accounting manager or internal audit team. They need to do the auditing, verified, then they need to. So if your turnover more than rupees 2 crore, then the CA should be audited or verified. If your transaction is less than 2 crore, then no need to go for the auditing. Next, the personal details, that is the proprietor details. If for example, any person you are going to supply the goods and that person GST number or personal details that you need to given. Next, detail of expenditure, whatever the expenditure you have made for your transactions that you need to mention. Purchase, that is goods or services, or intra or interstate, you are going to purchase the goods and services, that you need to mention in the annual return. Imports, if you are going to do any imports of goods and services or the raw material or ancillary service products for your supply, that you need to mention in the annual return. Next, the details of income, how much income you have generated, that is your gross profit, net profit, all this information should be there. Supplies, goods or services or intra or interstate. So if you are going to supply goods and services of intra or interstates, then if you are a supplier of a goods and services of any intrastate or interstate, then you need to mention that in the annual returns. Exports and imports also you need to mention, and not to be filled by the ISD, TDS deductor, casual taxpayer and non-resident taxpayer. So this is about the annual report or annual return you are going to submit. Next, the refund from the GST. So how we are going to get the refund from the GST? The time limit for claiming the refund enhanced 2 years from the relevant date. So if for example, for this particular date or in this month, whatever the date, okay, you are going to do the transaction. From that date to 2 years of time is there. So within the 2 years, you need to claim the refund. After 2 years, you can't claim the refund from the GST. Next, the refund of input tax credit allowed in case of exports or where the credit accumulation is on account of inverted duty structure. So whatever the exports you are going to make or the accumulation of all the accounts, that is also refund of input tax credit. So next, refund shall be granted within 60 days from the date of receipt of the application. So once you submit the application for refund, within 60 days you will get the refund amounts. In case of refund claim on account of exports, 90% of the claim can be given immediately within the 7 days of provisional basis. So if you require the urgent basis money, then within 7 days they are going to give the 90% of the whatever the refund claim is there for exports. Next, no need to furnish evidence against the unjust enrichment if the refund claim is less than rupees 2 lakhs, self-certification would be sufficient. Okay, so whatever the less than 2 lakhs rupees of refund, if you are going to apply, so self-certification is enough. And the last one, interest payable after 3 months from the date of receipt of application till the date of refund. So you need to pay after 3 months, interest payable for after 3 months from the date of receipt of that whatever the refund date you have mentioned or you have applied. So in this video we are going to discuss the what is the GST website, how it will be looks like, and what are the features or how we can get to know what is the new updates are there in the GST portal, how to log in, all those things we'll discuss in this video. Okay, so this is the GST platform. Okay, so here you can see how this GST interface look like. Okay, so here they are given goods and service tax, the home page. If you go for services, here we can go for registration. I already explained you, right? So application. If you go for new registration, so if you go for new registration, if you click, then whatever the details, we have 4 steps, correct? In the first one, the application. So in that we have so many details or the information they are going to ask, that proprietor GST number or the business entity name, all these things you need to give, and the whatever the supporting documents is required, you need to submit in the new registration. Then they are going to verify and they are going to issuance of GST number, and if you have any issues or the litigation or any other problems, then they are going to revert the application. So this is what I explained in the application of GST registration. Next, after applying, you can track your application status also. You can go and click on that and you can see what is the status of your application, whether it may be in a verification stage or assurance, or if any litigations are there or any problems or issues they are facing, and if they require any supporting documents, all those things you can track your application. And application for filing the clarification. So if any issues they have raised, okay, on that time you need to resolve that issues or you need to give the clarification for that particular issues, correct? So on that time you can go for this tab and you can click and you can give the whatever the clarifications or supporting documents is required for that particular application. So this is the registration one. Next, if you go for payments, so if you need to pay GST, okay, as a taxable person, okay, if you want to go for create a challan, and then you can go and download that challan and you can go for a banking and you need to pay. That is also available. Or grievance against any payment system. For example, I have paid the money, but it is under the process or it is not reflecting in our bank account or some other issues are there. Then you can go for this grievance against the payments and they track the payment status. So whatever the amount you have paid or payment you have made, that tracking system is there. Okay, you can go and you can check here. User services. So all this HSN code or generate user ID or unregistered applicant, cause list, verify RFN, holiday list, everything will be there. You can check refund, ITC, the input tax credit. So track whatever the input tax credit we are claimed or we are going to apply, that you can go and track in this application status, e-way bill system or track application status. All these things are available under this service tab. Next, the GST law. So under the GST law, you can see what is the rules and regulations or notification or any central government or state government if they are going to give some new changes or if they made any new updates. All those things will be given in this tab. Next, the downloads. So offline tools, GST statistics. So in the offline tools also, the returns or the GSTR 3B offline utility or ITC03 offline tool, all those things we have explained, right? So GSTR 1 to GSTR 11 or ITC 1 to ITSF 4, all those things will be there in this offline tools. And GST statistics. So whatever the data you required for the GST, that is available here. Taxpayers. If for example, search by the GST number or unique identification number, through that we can search that person or the business. Okay, search by the PAN number of the proprietor or the temporary ID or the search by the composition taxpayer. All those things are the available in the website. Other than that, the e-invoice are there. So if you want to log in, once the application is success and then if you got the whatever the GST number, then you can go here, click on login, give the whatever the GST number as a username and whatever the password is there, just click on the password or enter the password, then you can log in and you can do the whatever the GSTR 1 to GSTR 11 or ITC 1 to ITSC 4. All these documents you can fill and you can submit and take the whatever is required from the GST portal. And see here, whatever the new updates are there in the GST, okay, whether it may be a state government, central government is going to give an update, right? That is give here. So recently what is happened or recently what is the update, everything will be given here. And the FAQs, usually we give it as a frequently asked question. So popularly help tips or topics. So how can I opt for the composition? How can I use the returns offline tool? How do I apply for refund? All those things, the answers also they are given. Just click on this, whatever the questions you have, then you can get the answer. So help desk number or whatever the taxpayer, if you want to register or find a GST practitioner, all those things information they are going to give here. And if you come here about GST, so the GST council structure, I've already explained you, right? The GST council is a team or a panel member headed by the Central Finance Minister. So now the Central Finance Minister is Nirmala Sitharaman, correct? So they are heading this GST council member, and this structure is also available here. If you click here, you will get to know. And the GST history. So when it is implemented or amended in the India, and when they have started executing this GST in India, and the GST rates, everything is given in this GST history, website policies, all these things, related sites or Central Bank of Indirect Taxes and Custom, CBIT and state tax website, national port, all this information is available in this GST website. So once you have the number or your GST number, then only you can go and you can log in for the GST claiming, or you can do the whatever the transaction you are going to update, or you are going to fill the information through this login only. So summary, here is a quick recap of what we have learned in this particular session. Okay. So India's tax structure includes both direct tax and the indirect tax. For direct tax, it is a income tax, and it comes to indirect tax, that is the GST, the custom duty or the excise duty. GST is a crucial part unifying various indirect taxes. That is they have done the so much of replacement of so many indirect taxes, and then they have implemented this GST. That is the cascading effect they have done. Okay. Next, the GST goods and service taxes is a unified tax system in India, replacing a complex web of indirect taxes. It's designed to simplify taxation and promote economic growth. So to reduce the tax burden, they have eradicated or they have reduced so much of other tax burdens, and then they have implemented this GST, and they can promote the economic growth for this implementation of this GST in India. Next, the GST structure in India comprises, that is, the different types of GSTs, CGSTs, SGSTs and IGST, each with specific roles and regulations. Okay. It also features different tax slab rates for goods and services. That is your 0%, 5%, 8%, 18%, 28%. So these are the few tax rates they have done, correct? And the next point, the GST registration is mandatory for business that meet specific criteria. It grants legal recognition as a GST taxpayer. So if you are registered under the GST, then only whatever the advantages or whatever the benefits offers is given, okay, that you can enjoy. Otherwise, you cannot get any benefits from the GST portal or from the government, because you need to be a taxable registered person. Then only you can get all these benefits. Next point, the business must regularly file GST returns to report their transaction, sales and purchases. Compliance with return filing is essential for GST compliance. So we have discussed that GSTR 1 to GSTR 11. So continuously or regularly we need to update all the transaction or the quarterly wise, monthly wise, all this information in the GST portal, so that you can generate the annual reports. So ITC, that is input tax credit, allows business to claim credit for GST paid on purchases, reducing the overall tax burden. So whatever the input tax credit, the taxable person can refund from the government, and he can purchase on whatever the purchases and expenses. Next, the online GST portal that we have already seen, right? So how the GST portal looks like, and what are the features or whatever the tabs are available in the GST portal for the users, okay? Are the government platforms that facilitate GST registration, application of GST, return filing, and complaints for the taxpayer. All those things we can use in the GST portal. So these are the few things we have discussed in this particular session. Thank you.